Sure. The US economy has been showing signs of recovery, but over the last few months, we've getting more mixed data. Unemployment data has been great, the labor market data has been great, but some of the industry indicators are now beginning to slow down. And so there's a slightly more mixed outlook emerging. There is the expectation, of course, that the central bank will start to raise rates, the Fed will start to raise rates in 2015. Now, what the oil price drop does is that it, of course, weakens any inflationary pressures that would have come about otherwise with a slightly improving US growth picture. And because of that, it allows the Fed to have a little bit more time to start raising rates. As of now, we're expecting that they will raise rates in the second quarter of 2015, and it'll be a very slow and very gradual process of tightening monetary policy thereafter, a very cautious stance that they will adopt. But given the drop in oil prices, and if that were to sustain, we would expect that there is the chance and there is the risk that they may actually delay the tightening of interest rates. They might delay rate hikes even further into the second half of the year and not necessarily in the second quarter. Yes, definitely. I think the big risk in the euro area is one of a deflation, a Japan-like situation developing where you go into negative inflation territory. As you know, the ECB is an inflation targeting central bank wants to have inflation just below 2% levels. Right now, we're around 0.3% year-on-year inflation, which is very, very low. And given the drop in oil prices, of course, the big risk is that you go into negative inflation. And as a result, although the central bank has announced quite a few policy measures already, cutting the deposit rates, the long-term repo operations that it has been announcing, we do expect that it will have to do outright sovereign bond buying or bond buying from the corporate sector, most probably in the first quarter of 2015. So QE coming through from the ECB. The ECB was the only major central bank really that hadn't done QE. You've had Japan, the US, even the UK do QE, but ECB hasn't, and that's the real expectation now, that they will have to further ease monetary policy just so as to be able to avoid deflation and try and reach their inflation goal or inflation target over the next 2 years.